Good day, everyone. How are we all doing? I hope you are doing amazing. So I welcome you all to ESM 106 lecture 2. ESM 106 lecture 2. So as I said last week, we are going to, or that should be 2 weeks ago. So we are going to be looking into accounting for non-profit making organization. Accounting for non-profit making organizations. So in this accounting line, basically what we are going to be looking at is the receipt and payment account. So we can say another name. I need another name for accounting for non-profit making organizations. We can say is what is receipt and payment. And then we have an acronym for accounting for non-profit making organizations. So we call it NPMOs. So the S there is what is a small letter S. Is a small letter S. So as a way of introduction, so we can say that non-profit making organization accounting, they are institutions that are established basically not for profit making. So as the name implies, is not for profit making. They are established to serve communities, to render services, and their motive is not to what? Their motive is not to earn profit. Their motive is not to earn profit. And example of non-profit making organization, we can say an example is the orphanage. They render services to care for homeless children, children that probably have lost one parent or the other or both. We can say an example is also clubs. Clubs. An example is also our societies, our association, our trade union, our Nigerian Union, Polytechnic Union, College of Education Union, and also religion bodies, and public schools, public schools, public schools. I know some private school are, we can't say they are non-profit oriented organization. So then a practical example that is related to us in estate management, we can say our EMSA. Our EMSA is a very good example of a non-profit, aside the one I've mentioned earlier, of a non-profit making organization. So in preparing the account, and I also want to establish that for a profit-making organization, what we have, such organization or such firm, we have an accountant. We have an accountant that prepare accounting statements. But for a non-profit making organization, basically what we are going to see there is a treasurer. A treasurer. So a treasurer does the preparation of accounts, the bookkeeping, anything that has to do with the bookkeeping, the record keeping of an association that is not profit oriented. That is not profit oriented. Unlike the profit oriented business, what we prepare, I think we did this, that should be last semester, while we're talking about the manufacturing accounts. Then we were looking at their gross profits, their net profits. So anywhere you see profit and loss, what comes to your mind is what? Is this organization is set up for profit making. So in a situation whereby we have organizations that are not profit oriented, what is expected for us, or our goal basically? We have three accounts that are expected of us to prepare, that are expected of us to prepare. So the first one is our receipts and payment accounts. Our receipts and payment account. Then the second one is our income and expenditure account. Income and expenditure account. And the last one is our what? Is our balance sheet. The last one is our balance sheet. So what is the essence of getting our receipt and payment account, our income and expenditure account? You know, I said earlier that in a profit-making organization, what do we have? We have profits or loss. But in a non-profit making organization, what do we have? We have either deficit or surplus. So we don't call it profits or loss. We call it deficit or surplus. We call it deficit or surplus. Then in receipt and payment account, when preparing this, basically what we are after, or what we'll be looking out for, is our cash and bank transactions. Bank and cash transactions. I know we did something like this last semester, where the details were concerned about where our cash details and the bank details. So with this, I want us to take a little breath and just ruminate on what we did last semester that is related to this receipt and payment account, as related to the details in the cash and bank transaction. So if you can remember, you can just drop it in the chat box or in the comment section under this video, the answer to it. The answer to it. We did something like this last semester where our focus was just on cash and bank transaction only. So if you know you are sure of the answer, please drop the answer in the comment section. I will read through and then let you know if you are correct or wrong. So let's look into what receipt and payment account is. So at the concluding part of the introduction, I made mention that it contains, receipt and payment account contains what? The summary of cash book. The summary of cash book that is prepared on a cash basis. I also made mention that records of all cash and bank receipts for a particular period of time is taken into consideration. So it's taken into consideration because we know that in organization, they basically, there wouldn't be room for giving anything out in credits. There wouldn't be giving anything out in credit. So just look at EMSA, for example. So even if you have defaulters, you don't treat them as what's it called? You don't treat them as debtors. You rather refer them as defaulters, bearing it in mind that at the end of the day they will still pay, because probably, if payments were not made, so people are not going to be allowed into the department, or so people will be denied some services. It could be, they can't have access to the library, they can't have access to some lectures, they can't have access to writing of exams. I know there will be penalties for them to to make payments, and so we can't say they are debtors. We call them defaulters, because we know that they only default in payment. With time, the payment is still going to be made. So when talking about receipts and payments, as the name implies, is recording all payments made, all payments coming in. That is why a treasurer saddled with the responsibility of getting a booklet called a receipt book, which has invoice number. And why do we have this invoice number? We have this invoice number for tracking and for accountability, for transparency, so that if an auditor comes now and the auditor is looking through the book of accounts, definitely when you're preparing it, every receipt has what? A receipt number. So if one is missing, it shows that, oh, probably a receipt is being given to somebody, and it indicates fraud in a way. It indicates fraud in a way. Probably the money is collected, receipt issued, the money was not remitted, then the place is being torn, something like that. If there is no error in such receipt booklets. So basically, what we record under the receipt and payments account are all payments made, whether it's the revenue or capital. Basically, all payments made into the organization should be what? Should be recorded under our receipt and payment. And when preparing this, our real account is always annually, because it's expected that an organization runs from January to December. I know by now you will be familiar with this, although there are some exceptional cases where I think we did that should be last semester, where accounts are being prepared probably on the biannual, like every 6 months, some quarterly, every three months. But in most cases, for a non-profit making organization, we deal with our account is being prepared annually. Account is being prepared with annually. Then, so this leads to the characteristics of the receipt and payment accounts. Sorry, so anywhere you see R&P, R&P is referred to our receipt and payment account, receipt and payment account. So what are the characteristics of a receipt and payment account? Because we need to establish this. It is when you have an understanding of how a receipt and payment account is, that is when you will know how to prepare it. So before going to join our T's, our debit and credit as we used to in preparing our accounting statements, first, let us have like a background knowledge of how it is. Definitely, there are some, you can call it characteristics, you can call it quality, you can call it features of a receipt and payment account. So the first one, as I said earlier, is related to what? Cash. Is related to cash. Is related to cash. As you are making payments for cash, you are getting receipts for it. As you are making payments for cash, you are getting receipts for it. And I know now we've gone beyond just cash. I know, well, I don't know if, I think EMSA should be doing something like that, like you making the transfer and then sending and evidence of payment to them to show that, oh, you've paid before a receipt is being issued to you by the treasurer, And then the second one is the second characteristics is also that records for both capital and revenue items should be recorded under our receipt and payment accounts. Both the capital, like capital, the amount you have at hand, and also revenue generated. Revenue generation should be what should be added into our profit and loss account. Bear it in mind, revenue generated and capital. So in receipt and payment account, we must also take cognizance of our past, present, and future years, because we know that there are some payments that are, for example, for defaulters, probably students that haven't paid for last year and they are paying for this year. You'll say, okay, this is coming from the previous year. but we are preparing an accounting for this year. And also the people that are paying for this year also should be recorded. And also probably in some situation where some students have and they just wish, oh sorry, I want to pay for probably from 100 level to 200 level to 300, my 3 years dues. I want to pay it at a stretch. It is allowed. It is allowed under receipt and payment. The only thing is let due record be taken and let receipt be issued promptly to that effect. To that effect. And please take note also that under our receipt and payment account, we start with our opening cash/bank balances. Please let us take note of that we start with our what with opening cash/bank balances. So any balances from the previous year, either in cash or the one at bank, should reflect where when opening our receipt and payment account. It should reflect. And also at the end of the year, if you have any closing balances, it should also what reflect. It should also reflect. And when another thing to take note is when considering a receipt and payment account, a non-cash item like depreciation, for example, should be what should not be included. Should not be included because we can't monetize depreciation. We can't monetize depreciation. We can only quantify it like, okay, 10% of this, we assume this is it, but we are not taking it like, as a cash that we can see. Depreciation come as a loss of value. That is what we have in our mind. So it should not be treated as as cash. If you see any question, just think about it. Think about it like, okay, can this be converted into a physical cash? So if it cannot, then it should not be included in your receipt and payment account. It should not be included. It should not be included. And the last but not the least is a receipt and payment account serve as a what? Summary of cash book. I said it earlier. Whatever we are dealing with under our receipt and payment is basically what from our cash balances, opening cash, whatever the case may be, cash and bank. So we can liken this to be what? To be cash book. To be cash book. Then let's look into the sources of receipts. So the receipts I'm referring here is our income. Income as an organization, income as a firm, income as an association. Definitely, fine. It is non-profit making organization. So how are we getting our income? How are we getting what we are going to be presenting or what we are going to be recording? How are we getting it? The first thing that should come to your mind is your subscription. Subscriptions from members. Subscriptions from members. We can liken our subscription also in EMSA as your dues. So the dues you pay every year or every semester, I really do not know, serve as your what? As your subscription. Serve as your subscription. Another source is your entrance/admission fee. In a situation whereby we have a club, where we have a club, where we have a show gathering, where we have a function, where we have a get together like that, where a ticket is being sold, that okay, this is my access to what's it called, to the maybe dinner party or to the dance show or anything. So that is an avenue for a non-profit making organization to make money. For example, if EMSA comes down and say, okay, we are going for a picnic, and the picnic is not free, the gate fee is probably 5,000 naira, or you are going for excursion and the excursion is 10,000 naira. So that is an example of an entrance/admission fees. And also, in organizations, they can't shy away from the fact that, oh, we are not selling anything and in an exchange for money. But at the same time, we can't shy away from the fact that ESCOs should solicit for fund outside. Should solicit for fund outside. So the soliciting for fund outside comes in as a form of what? Donation. Any money given for, probably from a lecturer or from HOD, just to support the organization, to support the association, any donation from outsider that are not part of your association. So in a way, you can say they are what? They are donations. And grants also can be won for the association. Grants can be won for the association. Then we have what we call special funds. So in a situation whereby, oh, probably you have a project going on, there can be, you can solicit for fund for public building fund, as the case may be, or you want to have an EMSA library and the fund can be solicited for. So in a way, this is also an avenue for such organization to get fund. Then income from investments. We can't share it from the fact that even if you have surplus, so instead of the surplus just lying down, such surplus can be invested. It can be invested in bonds, in shares. So whatever gain or whatever additional income, we don't call it profit, whatever additional income you have there should come back to us, should come back to the organization, should add up to organization. And another thing, how do we also get income from income into the organization? Another one is sales of assets. Oh, probably you have an organization has a photocopier machine probably that is not working again, and this can be scrapped. Such can be, well, I can't say it can be auctioned, but I know it can be put for sale. It can be put for sale. Can be put for sale. Another one is the miscellaneous income. Income. So we can say from miscellaneous income, it can be, an example is fine. For example, EMSA can come now that if you don't pay as at when due, then be expected to pay probably an additional 10% on it. So your fine, your penalties, your penalties, all that comes under what? Under miscellaneous income. They are not income that are planned for, but as needs arise and there is need to call for it, for fine, for penalties, as the case may be, falls under what? Under miscellaneous income. So then under receipt and payment, we need to differentiate between receipt and payment. I know income and expenditure. I know we are not our requisites. We are not. It's not strange to us. We are not new to it. We've done income and expenditure account in the past. So what is the difference between our receipt and payment and income and expenditure account? So as I said earlier, basically the first thing to note is under receipt and payments, we have all our cash details are recorded there. Whereas under income and expenditure, both your cash, your accrual, your debtor, your creditor, everything reflects. Even the one that's, the non-monetized one, like our depreciation, still comes under that. Still comes under that. Then another difference is under receipt and payment, records are all receipts and payments. Record are all was receipts and payments. You make payments, receipt is given out. You make payment, receipt is given out. But in income and expenditure accounts, we only record revenue. We don't record receipts. We don't record receipts. We only record what is coming in as revenue for us. What is coming in revenue for us. Then for receipts and payment, I told us that what starting the year is opening balances either in cash or the one at the bank. That is what we'll be starting our receipt and payment. But in income and expenditure account, it doesn't. You are not necessarily starting your account with a cash or bank balances. Probably what you are going to be starting with will be your opening stock. Then you are closing it with your closing stock. So we can see that this one is not reflecting cash per se, but is reflecting what we have in stock, what we have in stock. So for receipt and payment, I said earlier that is similar to cash book summary. It's similar to cash book summary. Cash book summary. And what we have under our receipt and payment, what we have is closing what's it called, balances. We have closing balances. It doesn't reflect our surplus or deficit. But in the under income and expenditure accounts, instead of us writing profit and loss, we are not going to be writing profit and loss. So we are going to be replacing our profit and loss with what? With surplus or deficit. So this is similar to our what? This is similar to our profit and loss account. But mind you, instead of writing profits, you will not write profits. What you are going to be writing is what? Surplus. And in a situation where we have loss, then we record what? Deficit. We record deficit. Then what are the importance of a receipt and payment account? What are the importance of receipt and payment accounts? We can't shy away from the fact that number one, it provides members with a clear picture of how fund is being handled. Like it gives a clearer picture of how fund is being handled, because you can see the payments coming in and the receipts given out. And also it ensures what that the funds that are received are properly accounted for. Are properly accounted for. They are properly accounted for. And also the simplicity. It is very easy to prepare. Very, very easy to prepare. By the time we start into the practicability of this accounting, you will know how simple this is. It is very easy to prepare. That is why even a non-accountant can prepare it. Very easy to prepare. That is why even a non-accountant can prepare it. Then another importance is it helps in planning and control. It helps in planning and control. So with the accounting, with the RRP account, it helps in monitoring our inflow and outflow. It helps in monitoring what our inflow and outflow. So when you know your inflow and outflow, it helps you to plan, and it puts some control measures so that you know that, oh, you must not you must not spend beyond this. You must not spend beyond this. It puts control measures also in place. And then it's the receipt and payment account also form basis for our income and expenditure account, and also for our balance sheets. Like, is the foundation before we can even do anything. Is the foundation for our income and expenditure account, including our balance balance sheet. And because this is a non-profit making organization account, so many organizations are required to present this statement to their members. So they are liable to you. They are responsible to you. So as a member of an association, you have the right to call for the account statement. You have the right to check through, to check through. So this is legally bound, and is part of the constitutional requirement of any non-profit making organization. So after that has been said, concerning the receipts and payment account, do we have any limitation, any challenge, any how do I put it, any difficulty, anything modeling up? Yes, we do. We do. Then the first one we'll be considering is our capital and revenue items. Like, it doesn't separate your capital from your revenue item. All what we want to know is, what is our revenue? Oh, what do we have? Oh, this is what we have. So it doesn't give room for separation of what? Of capital. It doesn't differentiate at all. And also, in most cases, it doesn't really reveal if it is surplus or deficit. It does not really reveal it. That is why, even most of the time when preparing the account, you will notice that in well, they will not tell you, and when presenting that account, an organization will not tell you, oh, we have a surplus of this maybe 10,000 naira. Oh, we have a deficit of, oh, this also is not always spelled out. Eh? That is why you see a treasurer preparing an account, what they will always have is their receipt is the same thing as their payment. Their receipt is the same thing as their payment. What we received is equal to what we spent. So don't be shocked if you experience things like that in a non-profit making organization. A non-profit making organization. And also, another limitation is that it ignores outstanding expenses. It ignores, I said it earlier, anything outstanding, anything that is not at hand, that you have not received. It doesn't recognize it at all. It only recognizes your cash, like what you have in your hand, like what we can see, like this, what we can see. And then another limitation, it doesn't give room for depreciation. I said it earlier, since depreciation cannot be monetized, then it's not seen, like you can't have it at hand. So it doesn't give room for you taking note of depreciation. And also yeah, it provides only for partial picture of the organization financial performance. It doesn't give holistic view about it, because if not, there is nothing stopping them from taking into cognizance some assets they have, some depreciation, some bad debts, and all other accounting classes. No, it doesn't give room for that. So most of their performance that you will be seeing, they are not absolute. They are what? They are partial. So after all this has been said, I know in our head we are going to be, some things will be dropping, and then you will be like, okay, I think I have a better understanding of how a receipt and payment should be. So as a way of concluding, I will say the receipt and payment account is fundamentally a financial statement for as I said earlier, for non-profit making organization. And it only gives summary of all records of cash and bank transaction during a period, in order to ensure transparency and accountability. Transparency and accountability. And then, well, however, because it's not giving room for, differences between the capital and the revenue item. And it doesn't review, as I said earlier, it doesn't review the true financial performance. So we sometimes supplement we supplement it by what income and expenditure account, because I know you'll be wondering, oh ma, you were only talking about the receipt and payment, we haven't considered the income and expenditure account. And so because of these shortcomings, that is why we are bringing in our income and expenditure account, including our balance sheet, into a non-profit making organization. So in a way, just to give them a feel of, oh, this is a financial statement, a real financial statement. But everything will be needing for our income and expenditure accounts. Every details we need, the R&P is going to serve as a basis for it. I think I mentioned that earlier. Will serve as a what? As a basis for what? For it. So together, this statement it ensures what? Financial affairs, financial affairs of a non-profit making organization, a non-profit making organization. Like, now that we now have in inclusive of income and expenditure accounts with balance sheet, we can now say, okay, we now have a what? A final picture of how a how a proper financial account should be what should be presented. So aside the fact that you are preparing your R&P, you should go beyond preparing just receipt and payments. You should grow to a situation whereby you prepare your income and expenditure, then also your balance sheets. So with that, you can now say, okay, you now have a good financial statement. So I hope with everything that I've said now, so if there is any question, anything bothering your mind, you can drop it in the comment section. So thanks for listening. We are going to meet next week by God's grace in class. So by the time we meet next week, then we'll be going into the practicability. So if there's any question, please drop it in the chat box. I'm going to respond to them appropriately. I'm going to be responding to them appropriately. So thanks for joining this section.